This is part 2 of the TradingView introduction. In the title and in the description, you can see all the topics that will be discussed in this video. If you want to see the complete introduction, just check the channel and go to the very first part of the TradingView introduction. Let's begin. There are different ways to visualize the data, the price data in particular. And one of the more famous ways, the way that you see right now, this is in Candlesticks. So it's the most regular way to visualize price. For the side of Candlesticks, you can always also look at bars, hollow candles, which is essentially the same, but without a filled-in body, a baseline, Heikin Ashi, Renko, etc. If we look at the candlestick at first, this is not the default one. So this is the more default one. You can see it's green and red. And the reason I use black and white is simply because these are neutral colors. So one of the more important aspects on trading, and which will be explained within the Trias Traders community, is trading psychology. And there are loads of different things that are applied within that psychology. It's a very important part, especially for discretionary traders. And it holds that if you look at the default colors for loads of mammals, red in particular invokes or it triggers a specific reaction within the brain. And for humans, of course, since we're the most intelligent mammals, it is not as strong as for a bull, for example, yet it's still a color that might have an influence on a subconscious level if you see it. So let's say that you're in a long position right here and you wait for price to move against you, and you see all these red candles that are followed one day after another. That may trigger a specific reaction, which is not something you want, because you always want to have the trade setup done before you enter a trade, or you need specific dynamic rules to move specific things like your stop loss and or your take profit alongside or after you enter the trade. Summarized, in order to avoid specific psychological reactions from the red or green color, I use more neutral colors. And this is one template that I used before I started my Twitter account and Trias Traders. This is also a more neutral thing, for which light gray would mean that price goes up and dark gray means it goes down within that specific time period. So within 3 days, for example, or 1 day. And since I started Twitter and Trias Traders, I believe that black and white is more visually appealing as opposed to light and dark gray. But still, the important part that is neutral is something that is in the template, and I believe that it is an important thing to have. And as you can see, these in this way, so for the colors for your body, borders and wick, you're able to change the color accordingly, exactly in the way you want it. If we look at the other types of candles, we see that there are a specific few that are interesting to talk about. So the ones I will talk about are the bars, Heikin Ashi, and Renko in particular. If you look at bars, they are similar to the regular candlesticks. And why is this? Well, we see the exact same information being presented with the open, high, low, and close per specific time period. So this is on the daily time frame. So for every day, those 4 values are visualized accordingly. The difference between those two, however, are that the bars do not have a body. The next thing that we will discuss is the Heikin Ashi candlesticks. And the difference between Heikin Ashi and the regular ones are that Heikin Ashi is not a way to visualize price, but rather it is a way to visualize a formula of price. So what happens is that the regular price that we see at candles or bars is put in a specific formula, and in that way Heikin Ashi is calculated. One of the upsides of Heikin Ashi is that you're able to see a specific trend more easily compared to the regular bars. So for example, while here you can see a uptrend as well, there are specific days at which price decreased in value instead of increased at that specific day. While for Heikin Ashi, this is more smoothened out. So here only once this happened, but if you look at all the other days, price is in an uptrend and it's only green, or it's only red if it's in a downtrend. So Heikin Ashi is more or less used as an indicator as opposed to a way to visualize price, for which the latter is more done with candles or with bars that I just showed. The last type of bar that I'll discuss is the Renko bar. And the Renko bar is an interesting one as well, simply because Renko visualizes price in a completely different way. So what happens is that price is visualized for every specific increase or decrease of a specific step. So here you can see for natural gas, this is automatically calculated, but you see that for every 65 cents, a price or a bar is moved on the upside, and also when it goes down, also for every 65 cent, there is one next bar that is filled in, which is completely red. So in other words, for every 65 cents, price decreases and decreases and decreases, and there is a specific bar completely filled in consecutively. However, for a reversal, keep in mind that, let's say, price here moves to the downside constantly. But for this reversal, there is not only a 65 cent to the upside, but there's even a 2 times 65 cents to the upside before the green candle is formed. And why is this? Well, if price is in a downtrend and for every 65 cents it moves in that way, the thing is that when it moves up 65 cents, there is not an up candle formed yet. So because price still tends to be in a downtrend according to the way Renko is determined. So for a reversal, 2 times that specific movement is required before we see a bar to the opposite direction of the previous trend. So after a downtrend, there is natural gas needs to increase by 130 before it goes 1 to the upside, and after that, for every upside candle, it only needs that 65 cent as earlier mentioned. If we look at the more useful tools in TradingView as well, are the alerts, and alerts in particular are really useful because you don't need to be at your charts 24/7. So for example, for silver, if you look at the last public analysis that I made, I told that I entered a short on silver when price moved back into the monthly level, or below the monthly level rather. And for this, I wanted to have specific alerts in case price moves again back to the monthly level. I wanted to be up to date, and I wanted to be alerted so I can look at the way price develops, but without me being on the charts 24/7. So a way you can have an alert set, let me just remove this one. A way, for example, just below the monthly level, you can add it by placing an alert, double click, and here you can see at what price exactly you want an alert going off, or at what condition rather, because not only about crossing conditions, but there are several conditions that you can use before an alert goes off, and in that way there is a clear message at what exactly happens on why you're alerted. The next thing I'll talk about are the indicators themselves. So aside from the tools that you can use, there are also indicators that are used, so formulas for example. And if you look at the formulas, TradingView has quite a lot of formulas built in already. So they are made by the people that work at TradingView. For example, RSI is most likely here. Let me see. Yes, the relative strength index. And if you add this, then you can see the RSI of a specific security, commodity, currency pair, etc. And you see the way price or RSI develops throughout the days or hours or whatever time frame you're looking at. By pressing this button, so the button for settings, you can change the input for your indicator, you can change your style, the visibility, and In this way you can change the way your insights are getting out of the market. And in this way you can change it accordingly so you get an insight of what happens in the market. So for example, if you look at RSI, the moving average type, you can change it to the exponential moving average or to one of the other kinds. For example, you can look at moving averages themselves, so moving average of the price, and in that way it's really similar. You can change the time frame, so the time frame of the moving average. For example, if you think that the daily level is really important, or the daily time frame, but you want to trade on the hourly level, you can still have the daily level moving average on your chart while being on a lower time frame, and you can change the amount of days to look at for the moving average accordingly. So for example, you can use a 50, a 100 and a 200 thing, something that is used quite a lot by traders. And in order to visualize the different moving averages, I suggest to use a different color for every single moving average that you use. So let me just change this. You can see that now they are pretty hard to distinguish, but if we use a red and a blue color, for example, it will be really similar to change the way the moving averages shows accordingly, so that it is clear which one is the red and which one is the blue one. There is another indicator that I would like to show, and that's the Ichimoku cloud. I will not explain how the Ichimoku cloud is derived, but the reason I find it interesting is because it is an indicator in itself that has quite a lot of data. So it has a baseline, which is called the Kyunsen, and also a few other lines that in a specific way directs you to go for a long or a short at that particular moment. So it's an interesting indicator. I might make a video about this in the future. For now, I will not explain it as of yet, but it's an interesting one, and it's also available on TradingView. For this video, the last part I would like to discuss are the ways to backtest a specific strategy. So let's assume that you use the Ichimoku cloud. A way to backtest that strategy is to do this manually, and you can do this with the replay button on the top of your screen. You can simply click here, and from a specific point of time until now, you can play it as if price or as if we're at the 14th of February on Valentine's Day, for example. You can click right here, and in that way you can see how price moved step by step, and also how the indicator moved accordingly, and that way you can manually write down every single time you would take a trade, at what place you would have you take profit, your stop loss, etc. So all these things you can do accordingly, and this way it even plays out. And well, this is a good way to backtest manually. The downside, of course, is that it takes a long time and it's very hard to have a lot of data for it. So one of the better ways, in my opinion, is to use Pine, and Pine is a specific language in TradingView. It is a high-level language, which means it's really easy to use. There are loads of functions built in, and with Pine you're able to write a script, so write an algorithm yourself, just to have it as a test. So for example, you can have the Ichimoku cloud within your script and say that when specific levels or specific lines cross each other, you go for a long or go for a short or whatever, combined with the baseline, the Kyunsen, that also indicates that specific direction. If every condition is met, you take a specific trade, and this will be done for every single time. So I can, for example, use this one. This is not about Ichimoku. This is another algorithm for cryptocurrencies that I made. And in that way, you can see, you can fill in specific inputs. So what indicator parameters are used. So the smoothing length of the Rex indicator, the fractional adaptive moving average parameters, and all those things are able to be changed accordingly, just to have an ideal strategy, given that there is enough data, of course. And well, this is not an algorithm that's successful. This is just something I tried just to learn back when I was starting with algorithmic trading. And one of the more interesting parts of this particular thing is that it's all already calculated for you. So you see, given a specific set of conditions, when did I take a trade, what time, what price, etc., and what was the profit, what was the loss, and everything around it is all being calculated accordingly. For now, Trias Traders is about discretionary traders and not about algorithmic ones. I do think it's interesting for you guys to at least be a bit familiar with Pine, so just as a very first step of algorithmic trading. But since Trias Traders has its focus on discretionary traders, Pine will most likely not be discussed as of yet. And this is just something as a side note to give you guys, so you're up to date with the ways to backtest a specific strategy. This was the introduction to TradingView. This was part 2 of the introduction. I hope you guys enjoyed the video and have learned from it as well. Give it a thumbs up, subscribe, and turn on the notification button. I will see you guys in the next video.